Hello friends, welcome to the special class of Central Banking Elective for CAIIB. Now electives are very tough. See, specifically three electives are very tough, at least two. One is central banking, second is your risk management. Really tough. The easiest one is your HR, then rural and IT. These two are really tough. So we call him, I teach central banking and I have been in this central banking many years. I call them khatron ke khiladi. Those who I teach risk also, risk management and this, both. So I call them khatron ke khiladi. Okay, because this is very difficult one. The problem is, I'll tell you, with central banking, it is basically related to RBI. And we don't deal in RBI at all. We deal in our normal banking, daily banking. RBI has very little role to play in our daily functioning, except for your this GRs and this prudential norms given. Okay? So that's why those who have taken central banking, kindly follow my PDFs, or kindly follow my classes and YouTube channels. Okay? I'll be giving you the PDF. First only I'll tell you, when you join the paid classes, I'll be giving you the PDF, which will contain question banks, complete question bank. Now in this, your 90% of the paper will be from that PDF and the classes which I take. You need not follow anything else. So that's why I'm saying, join fast. Okay? So today we'll be starting with some questions. Okay? Let me start with a few questions and some theory also. I'll be taking some theory also as well as some questions also. So let's start. Which of the following is the major function of money market? So this is an important chapter in your module A in central banking. Which of the following is the major function of the money market? So check this. To provide an equilibrating mechanism to even out the gaps in the demand for and supply of short-term funds. So equilibrating mechanics to even out the gaps. So what do you mean by such difficult words? See, it's simple. To match the demand and supply. That's the basic meaning. To match the demand and supply. That's the basic meaning of this. Okay? Second, to serve as a focal point for central bank intervention for influencing liquidity and the general level of interest rates in the economy. Now, how does a central bank focus on this? See, pay attention now. What is the role of central bank in influencing liquidity? Central bank has various tools in credit and monetary policy. What are the tools? One is repo, reverse repo, okay, RR I'll write, right? Then they have LF facility, LF, liquidity adjustment facility, right? Then they have MSF facility, MSF is also given, MSF. Then SDF facility, SDF, okay? They have T-bills to be issued, T-bills. So RBI will use various methods, okay, to intervene for intervention into the influencing the liquidity. If the liquidity dries up in any market, RBI will give special provisions. Okay, they will issue special bonds, or they will issue they'll take back the bonds and give the money through reverse repo. If there is huge liquidity, okay, then what will it do? If it's huge liquidity, it will suck the liquidity through reverse repo. If the liquidity is less, then it will give the money to the banks by repo transactions. So these are the various tools. So influencing liquidity and the general level of interest rates. So interest rates will be affected. Kindly note, interest rates are always affected in any bank. Okay? Interest rates are always affected in any banking system as such, depending on the external conditions. Okay, depending on the external conditions. If there is a war-like situation, immediately things go in the reverse direction. interest rates, many of the countries try to hike the interest rates. So it depends on the external situations, and RBI has to be the focal point on this. Focal point means controlling authority. To provide reasonable access to providers and users of short-term funds to fulfill their borrowing and investment requirements at an efficient market clearing price. Now understand what do you mean by this providers and users of short-term funds. Provider means the one who gives the money, provides the short-term funds. Okay, means basically here we are talking of interbank lending. Interbank lending means bank-to-bank lending. Bank-to-bank lending is generally done on the basis of either repo or MIBOR, anything, MIBOR or repo. The banks fix the rate on their own. Okay, so between them, it's basically a OTC product, over the counter. One bank will deal with other bank individually, and the rate will be decided between these two banks. But what is the role of RBI then? Central bank. The role of central bank over here is to provide reasonable access. Access means the liquidity movement should be very easy. That's the basic. RBI is basically the facilitator, isn't it? So if it facilitates the easy way, now how does it do on the easy way? It does it through NDSOM. Okay, NDSOM is a delivery system for basically the settlements. Okay, it is for bonds. Like we have demat account, stock market for stocks. Similarly, we have NDSOM for bonds. So that's the role of facilitator. So the question over here is major function in the money market. The major function in the money market is all of the above. Okay, all of the above. That is the major function. Got it, everyone? Understood? Important question this was. Got it? Move on. Chalo, next. Next one. What is the primary focus of supervision by central banks? What is the primary focus? See this. Capital adequacy, management quality, earnings, and all of the above. It's like, see, this is like asking what is most needed to you, water or food? What is more needed to you, water or food? Both, isn't it? Capital adequacy, is it not the primary focus? What is capital adequacy? CRAR. Minimum CRAR as per RBI is 9% plus CCB, right? 2.5%. So it is 11.5%. This is required but obvious, right? So primary focus is CRAR. Basel norms. Basel is a bit lesser, not that strict. See, Basel requires CRAR as 8%. RBI requires 9%. Basel requires 8%. RBI requires 9%, 1% extra. RBI is very strict as compared to Basel norms. It is more stricter than the Basel norms. So that's why our banking system is very strong. Okay? Management quality. Now, management quality means who all are there in the top management as well as in the board of directors. Whether there are any technical consultants, technical directors, whether they are there. So, who are there? Management quality. Okay? So, this is very important, management quality. Otherwise, what happens? If non-technical directors are there, they won't understand anything about loans. Right? Next, earning, profitability. Profitability, earning means profitability. Profitability is a prime focus of any bank nowadays. Because without profit, no bank can exist. Even public sector banks, government is focusing on you should earn your own profits. Right? Now look at the public sector banks also. The culture in public sector banks has become more of a private bank. Daily pressures, daily insurance, daily KCC, daily third party. Why is this? This is because the margins are drying up. Profitability is the main issue. Everyone has to conquer, everyone has to capture the new customer base. And customer base is growing. See, understand the simple logic. If GDP of our country is growing, it means, see, there are two things. Population of our country is growing and GDP is also growing. Both are growing. So if both are growing, banking should grow. But obvious. Because new customers you are getting, means if they are growing, it means many of them are growing above 18 ages also. You are getting new customers. And GDP is growing means money is also growing. Okay. Also, if you check the Gini coefficient, the Gini coefficient in our country is roughly very less, 0.29, means it's equally distributed. Okay. So earning, all of the above is the answer. All of the above. Okay. What is the primary focus? So all of the above. Capital adequacy, management quality, earning, and all of the above. What is the main reason for giving regulation authority to central bank? Main reason. Regulation authority. See, regulation. So number one, inflation. Number B is collapse, bank collapse. Number C is corruption, and all of the above. So why is the regulation given to RBI for all the banks? Many of you will think the answer is all of the above. Corruption, bank collapse, inflation. Many of you will say all of the above. But means this is not the logical answer. Corruption can be anywhere. Okay, it can be anywhere. So corruption is not the primary reason for giving RBI the control. Okay, so this is out. There can be the corruption in RBI also. Means I'm just saying example. Means who can't say that? Means why can't this anything happen? And corruption can be anywhere, isn't it? So corruption, this is not the primary focus. And corruption for countering the corruption, we have anti-corruption department that will take care of this. RBI is not there to focus on corruptions, right? Inflation. Now we will say inflation is right. Inflation is the prime focus of RBI. That is the prime focus. But that is not under this regulation. That is under credit and monetary policy. Credit and monetary policy, right? Policy, okay? So the main reason for giving regulations, bank regulations to RBI is bank collapse. B is the right answer. Okay, B is the right answer. Got it, everyone? Which of the following countries has passed the Emergency Bank Relief Act? What is this Emergency Bank Relief Act? US, UK, France, US and Germany. What is Emergency Bank Relief Act? I'll explain you. First you give me the answer. There is a very draconian or danger situation in the Emergency Bank Relief Act. I'll give you that. What do you mean by this? Yeah. So what is the answer? The answer over here is, let me see. Okay, in the meantime, I'll explain what is this Emergency Bank Relief Act. One of the rules, regulations of this Emergency Bank Relief Act are, bank can limit your withdrawals from the bank. Means suppose if I am having, let's say, $1 lakh, okay, with the bank, and I want to withdraw it. Okay, so bank can restrict me, saying that, see, $1 lakh you are having with me, agreed, they are your money, but I will allow you to withdraw only $3,000 in, let's say, 1 week. 3,000 in 1 week. They can say 3,000 in 1 month. It's up to the bank. This is one of the most difficult regulations in Emergency Bank Relief Act. But which country has passed it? The country which has passed it is obviously USA. Okay, USA has passed this rule. So in USA, tomorrow if the banks say that I won't let you withdraw the money for next 1 month, I won't let you at all. No withdrawal is allowed. You can't do anything. Okay? You can't do anything. So this is the Emergency Bank Relief Act. Which of the following banks was established by East India Company in 1720 to increase the trade? So 1720. Okay? Kindly remember this bank, there were three presidency banks. Okay? There were three presidency banks which were combined to form the Imperial Bank. So the three banks were Bengal, Bombay and Madras. They were combined to form the Imperial Bank. Imperial. Okay? And then this Imperial Bank became SBI in 1955. Okay? 1955. This became SBI. So these three banks were combined to form the Imperial Bank. But now the question is not that. Question is what? In 1720, which bank was formed? This was just an extra knowledge. In 1720, Bank of Bombay was formed. Okay, Bank of Bombay was formed. Okay. So Bank of Bombay was formed in 1720. In which of the following year Paper Currency Act was passed? Paper Currency Act means nowadays what we use notes. This act was passed when? Paper Currency Act. Think everyone. Think of it. In which year was Paper Currency Act passed? Yes? Yes, it was passed in which year? Yes, which year? Think everyone. It was passed in which year? Paper Currency Act. Paper Currency Act was passed in 1861. 1861 Paper Currency Act was passed. Okay? When the Department of Banking Operations of Reserve Bank of India was organized. Now see this, we want specifically DBOD. Okay? Department of Banking Operations, or we call it DBO. Okay? When was this department formed? August 1945, June 1945, July 1945 and September 1945. Very nearby answers. Okay? Very nearby answers. So it was in August 1945. Okay? It was in August 1945 that the DBOD was formed. Okay? Got it? The role of central bank as a banker to government gained renewed relevance, particularly during the times of war. See, this is the main point. We always study that role of central bank is what? Banker to the government. But why banker? What do you mean by banker to government? During the world wars, when there was a huge shortage of money, at that time many of the central banks were formed. At that time. Means specifically you can say that central banks were formed to fund the government only. So that's why this RBI, means not RBI specifically, all the central banks in the world were formed during that time only. You see, general period of formation of all the central banks of the main countries, you will find it during that time only. World War I and World War II, mainly World War II. So funding the government was an important part for the war, and this was basically done for the Britishers. Okay? The current professional thinking, however, is that the role of central bank as a debt manager in a sense is conflicting with the core objective of central bank, namely price stability. See, what is the second role of RBI or second role of this central bank, any central bank? One, price stability. So price stability is a very important now. Okay, price stability. If the prices are not stable, if the inflation rises, central bank will be in a the worthiness of central bank will be in a problem. People will stop trusting the RBI if prices go up. Okay, that's why price stability is one of the major rules. But this always conflicts. Conflicts with what? Conflicts with this funding the government. This role and this role will always conflict with each other, will be in conflict. Okay. So, but second role of this is price stability. Kindly note. One is banker to the government. Second is the banker to the government. Second is price stability. Many central banks pursue price stability as a major objective of monetary policy, isn't it? See, if the prices are stable, then only the country, any country, means it works well. You see, in various, our neighbors only, check our neighbors, Pakistan, Nepal, Sri Lanka, Bangladesh. Why are there so many riots, so many uprisings? Because of main problem is unemployment and price instability. Prices are huge. You check the inflation rates over there. Check the inflation rates. Okay? So things are going bad to worse in those countries. But in our country, inflation is around 1.5 CPI and WPI is almost 0. So in our country, this will never happen because people are happy. Even the Gini coefficient, which we have just now I was checking, Gini coefficient is also, the lower the Gini coefficient, the better it is. So we have 0.29, which is one of the best in the world. Okay? So Gini coefficient. That's why price stability is an important part and money is distributed across all the people. It's not that only few are having the money. Gini coefficient will always give you whether the money is distributed across all the people or money is kept in some hands. Okay? Remember this coefficient, Gini coefficient. So many central banks feel that price stability is the main issue. Okay? As a debt manager of government, it was observed that central banks financed government deficits partially. Now there is a rule also in our country that the deficit of the government should not go beyond 3%. 3%. Okay? There is a FRBM Act. That FRBM Act gives accountability to the government for spending. Okay? So you can partially finance the government's deficit, but not fully. Government has to find the sources from itself. RBI will not finance it. Okay? The process of extending credit to government puts pressure on the monetary policy of the central banks as they need to create excess money to meet the government needs, right? Same thing is happening in USA right now. Their debt is almost, what, 37 trillions now? 37 trillion. And the GDP is around 27, 28 trillion. Okay? So that is also, that GDP is also related to services. So real GDP is very less. So that is putting a huge pressure. And what are they doing? They are just printing the money. In last 8 years, they have printed some 16 trillion dollars. So funding the government expenses by central bank, this is the best example of USA. This is, once this happens, the government, the countries are in the problem. Okay? So the process of extending credit to the government puts pressure. Obviously, it will put pressure, isn't it? Because either you can fund the government or you can fund the people. Simple logic. See, this maintaining price stability means what? Funding the people in other sense. So either you can do this or you can do that. Both you can do. Government has to find the ways to fund itself. And this is going on well in our country. The theme of central bank independence has gained thrust, particularly in aftermath of Vietnam War in 1960s and 70s. The expansion of world liquidity and enduring inflation. So, after this Vietnam War, means basically US-Vietnam War, where US lost. Kindly note, USA lost heavily in Vietnam War. And because of this, central bank means it was found that central bank was funding that Vietnam War in their case. So to remove this blockade means in future also they thought that every war central bank will go on funding. So the autonomy of central bank came into existence over there. The undue fiscal and monetary expansion in Latin America gave further impetus to the view that central bank should be independent of any government interference. So this is very important. Autonomy of central bank is very important. Okay. If you have autonomy, then central bank can function. In our country, we have autonomy. Autonomies can be on various angles. Okay, they are functional autonomy, they are financial autonomy. Okay. There are three types of autonomies. You will study this in the topic. Another issue relating to central banks is that of its function of regulation and supervision of financial entities. This is one of the another rules. Regulation and supervision of financial entities. Okay. So basically it acts as a regulator of the banks. Not only banks now. Banks, NBFCs, private financial institutions. RBI is the regulator of all now. It's not only the regulator of the bank. This issue arises in the wake of the observation that the roles of regulator and supervisor are divergent, and entrusting these roles to a single authority, namely central bank, could lead to conflict of interest. So regulator also and supervisor also, both the roles are with the same entity. That's why people are saying that these should be separated or what. Not needed. You can have separate departments, right? Okay. And you can have separate checks on RBI also. Why to separate them? The new objective function assigned to the central bank is to focus on the price stability. Say this, price stability, with financial stability as an additional objective. So financial stability and price stability. Price stability means they have to look at the inflation. So inflation means monetary and credit policy. They have to check, RBI has to keep a constant check on CRR and repo. Okay. The core of modern central banking also consists of development of financial markets and instruments. This is an important role of RBI now, central banking. Role, development of financial markets. See, development of financial market means there should be a primary market and secondary market. Secondary market, if it is there, then only primary market works. Kindly note this. If there is a secondary market, means there is a buy and sell among the various participants, then only the IPO will work. Otherwise, why will anyone buy for the IPO? Isn't it? So, markets and instruments, financial regulation and supervision, management of government debt, administration of payment and settlement systems, and maintenance of external value of the currency. So these are all the roles of RBI now. See this, financial regulation and supervision, already I have explained this. Management of government debt, see this, government means funding to the government. Admin of payment and settlement, so payment and settlement systems, administration means as a sort of a controller or checker, an auditor of payment and settlement systems. Okay, it is also the regulator and it is also the supervisor, both, okay, of payment and settlement system. Then, and maintenance of external value of currency. This is one of the major roles of RBI. External value of currency means the rupee rate. The rupee rate should not, means not falling or increasing. Okay, it's not that. Otherwise, somebody will say, sir, now the rupee has fallen so much. So, is the RBI inefficient? No. These are the policies done. As far as your inflation is in control and your Gini coefficient is okay, kindly note the rupee value falling or this rising, it is always controlled in some way or the other by the government and the central bank. Okay? So don't immediately jump to the conclusion, if rupee is falling, don't jump to the conclusion that, see, rupee is falling means the country is going down. Nothing. Everything depends on inflation, GDP. Our GDP is rising. Okay. Though many central banks have adopted inflation targeting, see, inflation targeting is a main rule. Inflation target, okay, as a core objective and recorded free degree of success. The consensus of inflation targeting as an exclusive central bank mandate remains elusive. This is okay. Inflation target is one of the important roles of RBI. Inflation targeting, okay, because you have to control the inflation. Only then there will be a growth in any country, otherwise there will be civil riots. So these were some of the important rules and regulations of central banking. To know more, join our central bank paid class which is coming up, okay, which will come up. So join it at the time of exam only. Join the class, the PDF will be given by me, question bank will be given by me. You will clear the paper using the PDF, question bank and my classes. That's it. So as I was telling you that follow the videos and follow the classes for central banking as well as the main exam also. See, main papers are also not that easy. Kindly note. Okay. Join the papers immediately. Got it? Now the batches are over here. Kindly note the new batches crash course is just started. Join the batch. See this crash course for CAIIB. Join it ASAP. English as well as bilingual. You will get the same for bilingual also. Go to JAIIB CAIIB. Click on CAIIB December 25. See this crash course for English. E-books, mock test, online live classes, recorded sessions, everything you are getting. Join it ASAP. Okay, use the code Y432 to get the maximum discount. What maximum? See, I'll show you. Discount is up to 83% sales. Put the code Y432. Look at this. 82% using the code and 1% extra using the app. Download the app first. So 83% discount you're getting. Join it ASAP. Okay, all the compulsory subjects are covered. And for central banking, we'll be having a separate 7-day session at the time of exam. Don't miss. Subscribe to the channel. Okay? Don't miss this.